Cosimo Marasciulo, you're head of European government bonds and currencies at Pioneer Investments. What's your general outlook for the Eurozone this year?
Well, it is a very complicated outlook this year. Most of the trends we have seen in the last few years, so lower yields on German rates, low spreads on peripherals and credit. We are in an area where everything looks quite expensive, but we are not sure that we are close to sort of bear market on interest rates and spread. So it's a very complicated year because probably we are more in a trading range environment rather than in a trend market.
Italy, your home country, has a new government. What makes us, or could make us believe that Mr. Renzi could make things better than his predecessors?
Well, there is a strong commitment. We have a very good Minister of Finance, and I think that there is a strong momentum in terms of structural reforms. And the big news is that there is a strong realization that we needed to increase the potential GDP growth for Italy. The problem is that it's not a 3-month story. These are structural reforms that will need a longer time to be fully implemented in the economy.
Some people say it will take 5 years to make a tax reform to, resettle the labor market. Is that about the time range? Yeah.
Well, maybe 5 years, maybe too much. But in terms of effect on the unit labor cost, probably you need to wait, 2, 3, 4 years before you still really see Italy regaining all the competitiveness against Germany, let's say.
So, what are probably other problem candidates for the Eurozone? We have Greece this year will probably need more money. Is Greece or France or other problem candidates?
Well, I think that the big change compared to 2011 and the first part of 2012 is that now we have the OMT. So in a way, all the increase in volatility will be more limited compared to 2011. Still, France needs structural reforms like Italy does, and Greece needs more money. So not all the problems have been solved, and we need to be. This is why I said that even sovereign spread look expensive at current levels in Eurozone.
So last question, we have the tapering going on in the US. We also have this difficult environment here in the Eurozone. How should bond investors behave in such an environment?
Well, probably in the first half of the year, the tapering story will prevail, so higher interest rates in the US. During the second half of the year, maybe a slowdown coming also from emerging market space will be supportive of government bonds for the remaining of the year.